Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Okay, guys and gals, let's take a look at what we have on the gold market. So recent performance was, well, a bit dramatic, especially closer to the end of the session. And gold even has shown the worst action compared to the interest rates. So even interest rates have shown better price action than the gold. But let's take a look at it step by step. So first of all, on the daily chart, we have unpleasant moment for the bulls. We have the bearish grabber has been formed right on top. It suggests the drop below these lows. So at least market could wash and rinse the 1750. That will be the best bullish scenario if we will get it. In the worst case, we could get just downside breakout and moving back to the lows around 1723. That will be not good sign. General appearing of the grabber here brings nothing good to the bullish context. And at least it tells that currently we should wait a bit with taking the new long positions and just see how situation will develop. Besides, on the intraday charts, we have another bearish signs. In general, the fact that market wasn't able even to climb slightly higher and hit the XLP target around 1805, this is bad sign, especially if you'll take a look, for instance, what the performance was on interest rates. So here's, by the way, the same grabber we have on interest rates. It suggests taking out of this top as well, so it might be some strong upward action. But take a look what we have on the intraday chart. On the intraday, we have nicely looking sell-off, and the third in a row that we haven't seen on gold. So in general, here is performance much better than we see on the gold market. And in fact, gold theoretically had some chances to hit 1805, but that hasn't happened. This is signs of weakness. The gold market currently, or better to say, not enough power and ability to reach and complete the major target. So on the lower time frame, take a look on the follow time frame chart. What else we have? First of all, here's right on top, so you can see what the performance was on the interest rates and what performance we have on the gold. So gold is more tight price action, not as extended on the interest rates, and definitely market feels the pressure of the 18 even confidence resistance, so it still can't get through it. Some kind of the inspelled area, and this market wasn't able even to show a slightly higher spike to complete the OP. And currently we've got bearish reversal candle, so we have the new top and close below the lows of the previous candle. This is bearish reversal candle, and it suggests another downward action. So in current situation, I wouldn't hurry up with taking a new long position and wait until 1750. If everything will be nice, market could show the wash and rinse of these lows, just a complete daily grabber, forming something around 1750, and then make another challenge, make another attempt to go higher. This is the best scenario. In the worst scenario, we just will get the collapse here and break out to the downside. Second bearish moment that I do not like it here is the wash and rinse, guys. So this spike also has grabbed the stops above the top area, about this area. So this ABCD pattern, of course, we do not need anymore. And this is another bearish sign that we have actually here. It's wash and rinse. So currently, in the nearest few sessions, I would consider a kind of the strong downside ABCD pattern and stand focus on the 1750. We could keep in mind that 1750 potentially could be suitable for taking the long position, but first, I think that the just observation of the situation, monitoring of the price action should be enough. Because step by step, but we are going to the non-farm payrolls release, and maybe market will appear around 1750 right at the moment when the payrolls will be released. And then they could make the decisive impact on the market. Whether gold will collapse here with a strong non-farm payrolls release, or it could get the second chance to retest and still hit this target final. So that's what we could see. But within the nearest sessions, 2-3 sessions probably, while we're going to the payrolls, chances on the downside continuation here stands stronger. than immediate upward reversal. On the hourly chart again, take a look. Our bounce up from here was nice, so you can see it has worked. But then we were stopped out on the break-even. And market also has completed some bearish moments. So as we said, if we will break it down, this also the confluence support was, if you remember, and drop below inside of the broken widening triangle, that's will be bearish. And you can see what the strength of the collapse was here. We'll take a look by the recent action. Usually happens some consolidation here, it might be, and then downside continuation. We are waiting for something of that sort, based on the reversal type of candle here, based on the wash and rinse, and due to the daily grabber actually that we have. So currently market hits the first intraday 1770 pip support, but this is minor, just a tail. It makes no big impact on the overall process that we see here. So that's actually what we have on the gold. I don't know whether you intend to go short with this type of action. Theoretically, you could wait for some ABC retracement, trying to catch current triple to sell, with trying to catch again the downside leg. But this is, guys, very small on a short-term time frame for trading. So it's difficult to just offer you this scenario because it will be maybe on the 15-minute chart. So you could trade it. But in general, speaking in our time frame, I mean, where we usually are trading on the daily and fall time frame chart, I wouldn't consider any long position by far and wait for 1750. In the second step, I would take a look what will happen around the 1750, whether any bullish signs will be around it. Because, as we said in the weekly report, overall context is fragile. It's not really very friendly to the gold in the longer term perspective. And market is very nervous currently. It's very sensitive to any rumors, any news. Investors change the value of the position and direction of the position very fast, as we saw from the CO2 report. That just indicates that market is scaring. And when the market is scaring, it's very dangerous. And as you know, the fear is stronger than the greed, and on the collapse, market moves higher, faster than on the way down, on the way up. And market currently particularly stands at the point before a long-term downside reversal. It could be volatile, it could show lots of bounces, but in fact, this is a kind of the swan song for the gold, by our opinion. And in these circumstances, we should be extra careful with taking any position and to get solid context before they put the trigger. In the current situation, I think that we should follow the steps that I just have explained.